gotta leave your money behind you.
Welcome back to another episode of Gimme Some Truth, International Edition. Dame la verdad, dites-moi la vérité, and we're talking about a country here with actually 3 official languages, if I remember correctly. So we could, learn the German for that and the Italian, or as my grandmother would say, the Italian.
It's actually 4 official languages.
What's the 4th?
It's Romansh, which is a language spoken only in one very specific area of Switzerland and nowhere else. So there are very few speakers in the world anywhere, but it is an official language in Switzerland.
Interesting. So would that mean, what is the origin? Is it like blend of Italian and
I think it's French? Probably, and I'm not like an expert, but I believe it has like a Latin root, but I don't know the full history of it, but it's like a lot of people say it sounds weirdly like people speaking Old Latin mixed with German and Italian kind of thing.
Wow.
Well, I was going to say, it sounds like maybe there was this village that time forgot that they learned Latin.
This would be a cool horror movie kind of thing. When somebody ends up in this or just like a dark drama, where bad things happen and they're in this town that speaks a language that no one's ever heard before.
You get trapped by an avalanche in the Alps, and you're stuck in this Romansh village where you can't understand anybody around you.
Right.
And then turns out they're cannibals, and that's why nobody's ever escaped from that village.
Oh, wow. That I like that twist.
Yeah. Well, we're making a cheap schlocky horror film. So
isn't this romantic?
All right, let's move on from there.
Back on track.
Yeah, once Stan starts singing, we know we've gone somewhere that we don't want to go. We are talking about Switzerland, and it's not ironic that Sil was the one who was able to identify the 4th official language, because Sil, you have more experience with Switzerland than the rest of us through a couple of avenues. Is that correct?
Yeah, so I lived in Switzerland for many years. I'm actually a Swiss citizen as well. So, excited to be talking about Switzerland today. I mean, I think it's a country that, even though it's just a tiny country in the middle of Europe, I think historically it has punched way above its weight in terms of how important it's been in our client base. We actually have quite a few clients in Switzerland, and we talk to people fairly frequently who are planning to relocate to Switzerland. And so we wanted to do a bit of a podcast to talk about things you should be thinking about if you are planning to relocate to Switzerland, right? And people think that Switzerland is just watches and chocolate, but there's a lot more going on in Switzerland. There's pharma, biotech, big finance industry.
Big time biopharma.
Yeah. So a lot of reasons.
Roche.
For Basel is a huge hub.
Yeah.
A lot of reasons for people to consider relocating. And actually, just before this podcast, I was talking to a client in the UK who is in the process of relocating to Switzerland for professional reasons. So we do have a lot of clients there. So
and so as Sil, you kind of identified, and I think we should make clear at the outset, with 4 official languages, Switzerland structurally in terms of its government, and then accordingly in terms of tax and so on, is a little bit different than we might think of when we look at it from our kind of federal tax and then state tax perspective. Correct?
Yeah, that's correct. I mean, Switzerland, as I've often said, is probably the most decentralized country in the world. And when we think about the things that our clients are concerned about, for example, the tax system in the country where they're about to relocate to, Switzerland doesn't have one tax system. It has 26 different tax systems because there are 26 cantons in Switzerland. And they are all very independent and powerful and have a lot of discretion in their ability to...
It's like a red state wonderland where there is no federal government, right?
It's
in a sense, almost.
they're called cantons, which would translate into county in English, but they work very much like U.S. states,
Right.
And in many ways, they're actually even more powerful and even more independent politically than what our states would be. So, and interestingly, from a tax perspective, it's a little bit, it's kind of like the opposite of here, where here, if you live in a low tax state, you worry mainly about federal taxes, and state taxes are kind of an afterthought. In Switzerland, it's the opposite, right? So 95% of the taxes you're going to pay in Switzerland are going to be local taxes. They're going to be communal taxes and cantonal taxes. And it's the federal tax that really is an afterthought. So as a consequence of that, it's very difficult to generalize in terms of, okay, so you're moving to Switzerland. Is this potentially a tax beneficial type of move? Are you moving to an attractive tax jurisdiction or not? Well, it really depends, right? I think you could be moving to Switzerland and you would effectively be moving to a very typical high tax Western European jurisdiction, or you could be moving to Switzerland and be moving to a very low tax jurisdiction. And the difference would be moving to Geneva, for example, which would be a fairly high tax canton, or if you're moving, for example, to one of the cantons in central Switzerland, like Zug or Schwyz, you could be moving to a very, very low tax jurisdiction. And that would have really important implications for a number of, investment and financial planning questions.
And one place it also comes in is, again, to speak to the power, they basically assign and set up the rules in terms of estate and inheritance as well. We were just having a little bit of a conversation, Stan, beforehand, in terms of looking at, the estate treaty between the U.S. and Switzerland, and then what that would mean in terms of, your tax liabilities, depending on where you lived in Switzerland as well.
Yeah, and so, there are things that the different Swiss cantons have in common, even though there are a lot of differences. And so one thing that they have in common is that typically they don't have inheritance tax for transfers to a first degree relative. So typically you can transfer assets to your children and there are no inheritance.
It's an unlimited exemption, essentially.
Yeah, I believe there's a couple of exceptions to that rule. And it's only in, I think, a couple of the higher tax cantons in the French speaking regions. I think Geneva and Vaud have some form of inheritance tax, even for close relatives. But anywhere else in Switzerland would be a fairly tax-friendly jurisdiction from that standpoint.
Right.
There are other things that cantons have in common. One is the wealth tax, right? So Switzerland is one of the few remaining countries around the world that still has a wealth tax. And every canton in Switzerland has a wealth tax. Mm-hmm. But again, it's going to vary from something that is, something you barely need to think about to something that is very, very meaningful and can account for a significant part of your tax liability. So again, it varies a lot from one place to another. The other thing that they all have in common is that there is no capital gains tax.
Awesome. I was about to say, let's get into capital gains still. That's one of the interesting aspects of Switzerland, right?
Yeah. So no capital gains on, selling a stock, absolutely no capital gains to pay. And that's the case anywhere you live in Switzerland. None of the cantons have capital gains. Some have a very limited exception that applies to taxes to pay when you realize a gain on your local Swiss property. But as far as stocks and bonds and traditional assets of the kind that we would manage, there's no capital gains tax in Switzerland that would ever apply to that. The only other exception would be a scenario where, you realize a lot of capital gains and you're maybe an active trader or something like that, and maybe your tax office could look at it and say that you're effectively doing that as a business income. And I think there's some Swiss cantons that historically have been pretty aggressive with that interpretation. So, if you're an option day trader or I don't know, crypto trader or something, maybe you'll struggle to realize that benefit. But for most people,
go live in France and trade on the NASDAQ.
Yes, that would potentially work. But other than that, for most people, pretty attractive from that standpoint of not having capital gains tax.
Well, so and I mean, whenever we're talking to a new client or prospective client, and we're talking about if I move to this country, what will taxes look like? I mean, obviously for Americans, wherever we go in the world, that federal U.S. tax follows us, right? So we oftentimes think of one country as, well, the tax rates are higher, so you're going to be a net German taxpayer, or you're going to be, a net Austrian taxpayer, or you're going to be a net Japanese taxpayer for sure, right? I mean, It's just like if you hear the word Japan, you know that like you may not pay U.S. taxes anymore because you're going to build up tax credits on your Japanese income tax. In Switzerland, what's interesting then and intriguing about this is that the answer is never revealed by the country, right? It's always, it depends, and it depends for multiple reasons. So it's kind of a fun puzzle to cipher through as a planner, right? So, I mean, because it's going to depend first and foremost on your canton of preference, right?
Absolutely.
And then secondly, it's going to depend on what type of income you're throwing off, right? Is it portfolio income? Because maybe you don't want to just hide out and collect dividends in your taxable account. Maybe you want to have that in your retirement account, which will be protected from tax by treaty, right?
Yes.
But in that taxable account, you're not subject to capital gains in Switzerland, right? So
yes.
So maybe you're not, a lot of your income comes from capital gains, you're going to end up being a net U.S. taxpayer.
Yes, absolutely.
Yeah.
So you have an incentive to buy a bunch of growth stocks,
Right.
is what you're getting at.
I'm getting at it, and I'm also, this another thing that comes up quite a bit is, especially, European clients oftentimes have non-U.S. spouses, right? And Switzerland being a place full of biotech and banking, and there's a lot of high earning execs, and there's a lot of people who are compensated through stock, right? So they're subject when they sell that stock position to U.S. taxes, but their spouse may not be.
Absolutely. And there's a lot of great planning opportunities for people who live in low tax areas and have non-U.S. spouses, gifting strategies.
Yeah. And it's in those, tax-free or tax-advantaged countries where those type of strategies can really pay off.
Absolutely. Yeah, and so I think, just to clarify, there are certain strategies in terms of what assets get assigned to which spouse. If one is a non-American spouse, or if you have, a company, or you have a property that's going to appreciate and so on, there are ways of, giving gifting it to your spouse so that it gets out of the U.S. tax system that can be very efficient and amenable to big picture planning in Switzerland. And then as well, like you identified with stock options, should I gift and then sell, right?
Yeah.
As opposed to me just selling myself. One of the other things you bring up, and I would say overall, if you're a retiree, Switzerland is a pretty friendly place, but it's expensive, right? But a lot of people, as you identified with biotech and tech more broadly, move to Switzerland because it's a growing industrial hub in growing industries, right? And one of the things that comes along with that is the Swiss pension system, Sil. And, I'm going to do the you got all these pillars. What's with all these pillars?
So we'll bring up pillars, and then the rest of the hour is yours. Go.
Yeah. Reminder. Yeah. 3 pillars pension system, but we've only, got another, 6 or 7 hours to kill.
Oh, okay. So I'll keep it brief, but yes, the you can't really move to Switzerland and not hear about the pillar system. So the pillar system is the idea that there are 3 pillars that secure your retirement. And so the first pillar is effectively the Swiss equivalent of Social Security. The second pillar is what's the Swiss equivalent really of a 401k. And so if you are an employee in Switzerland, your employer has to enroll you in a second pillar account, second pillar retirement.
It's compulsory 401k.
Absolutely. So you don't have, and sometimes it's a valid question. You're thinking, oh, maybe I'm an American, I'm taxable anyway, it's complicated. I don't want to participate in the second pillar. You don't get to do that. Tough. Because it's the law that your employer has to contribute, right? And so it works a little bit like a 401k. In some ways, it's also different because it's got like an insurance component to it. So usually it's got like death benefits and that sort of stuff. But there's a lot of flexibility in the way that employers can structure it. And depending on your job, you could have very generous company matches. You could have, there are even employers who will just, dump 20% of your gross salary into a second pillar. I mean, there's really a lot of different ways that a second pillar can be structured. And, if you're moving to Switzerland, contemplating taking a job there, have a good look at what benefits are being offered through that second pillar, because oftentimes that could end up being a fairly significant part of your total compensation. And for foreigners, for Americans who are relocating, it's also an interesting type of account because it's fairly mobile. You can take it out when you leave Switzerland, and there's different scenarios. If you leave Switzerland and you go to a European country, you can only take out part of it. But if you move back to the US, for example, you may be able to take out the entirety of your retirement balance. So, and there's a lot of different strategies you can employ to try to be tax efficient with your second pillar. You can record it in a way as to build a tax basis in the account for U.S. tax purposes. You can try to be smart if you end up leaving Switzerland about transferring the account to a low tax canton in order to have a lower withholding on that distribution. So there's a lot of tax mitigation strategies that you can employ, and that's where it's helpful to talk to an advisor who understands all those issues even prior to moving.
And, with regards to the pillar 2 as well, one thing to bear in mind is you do have those options, because generally what happens is the employer puts more money in than the employee does, correct?
Yeah. So again, there's a lot of flexibility, so you never really know, but that's pretty typical. I've even seen scenarios where it was just the employer contributing and the employee didn't even have to contribute. But yes, so that's generally the case. Oftentimes the employer ends up putting more.
Yeah, and so, becomes a case where you can look at tax credits too in the U.S. and so on and so forth.
Absolutely, yeah.
What is the third pillar, and should Americans consider it?
Yeah, so the third pillar it works a little bit like an IRA. And actually the contribution limit is very similar to an IRA. It changes all the time, but I think it's around 6,500 Swiss francs. And it depends, whether an American in Switzerland should use it or not. It depends what canton you live in, if you're a net Swiss taxpayer or a net American taxpayer. So if you are a net Swiss taxpayer, it may be useful to contribute because you're going to get a tax deduction for having made that contribution. Where you want to be very careful is that the third pillar accounts, typically they are offered by So they can be offered by banks. They can be offered also by just investment companies and insurance companies. And so oftentimes the stuff that's offered by insurance companies, they may end up investing you in products that may not be suitable for you as an American, like foreign mutual funds. You should never invest in those.
So as a preface here, what you're basically saying is that the third pillar isn't going to enjoy the treaty protection of a traditional pension.
That's correct.
Which is why the passive foreign investment company rules come into play.
Yes, and because so that's a contribution that you would be making entirely. And what we've seen from the tax preparers that we've worked with is that so typically that would be treated as a taxable account for U.S. taxes, right? From a U.S. tax standpoint. And so you have to be very careful about what you invest in that particular account.
Because it doesn't have, the like protective coating, or, with a traditional pension, the U.S. tax authority, the IRS, doesn't look inside of it in the same way as they do with these Pillar 3 pensions.
Correct. So you have to be more careful. But if you want to do it in the form of a bank account, for example, that might work, right? Because you're going to earn, a little bit of interest here and there.
Still get the tax deduction in Switzerland.
Yeah, you get the tax deduction in Switzerland.
Right.
And you would just report it as a foreign account and report the interest associated with it. Right. But that's unlikely to move the needle, right, as far as your taxes are concerned. Mm-hmm. So in the end, it may still be beneficial, and you have to just make sure that you understand the implications of the what you hold in that account from a U.S. tax standpoint.
There are a couple of other issues that we can touch on it, but actually, related to all of that, because Switzerland is both in and out of the EU in its own little way, and how that affects what you can buy as an American a little bit. But I think, probably a pretty good place to wrap up. The other thing related to that is the U.S. and Switzerland are kind of at odds, we'll say, over the tax treaties. Switzerland not terribly happy with the U.S. after the passage of FATCA, as they felt a real restriction on their sovereign bank secrecy laws.
Bank secrecy is sacrosanct. It's religion in Switzerland, and the U.S. Really showed how agnostic the country we're supposedly supposed to be. Yeah. Right.
And so there are other issues that are going on in terms of the treaty and so on that will probably pop up. But I think that's a pretty good place to start. And if you have questions going forward, feel free to reach out to any of us. Obviously, we all work together. We're all capable of these sorts of things. But if you're really focused on moving to Switzerland, I think Stan and I would both agree that Sil is the in-house guru on questions of Switzerland.
He is the man who carries almost as many passports as Switzerland has official languages, right?
Indeed.
And, it clearly, the podcast just clearly shows, the type of specialized knowledge that Sil brings to the table in this area. And I know I lean on him a lot in Switzerland, just as I would lean on you for Spain,
Yeah, exactly. And we didn't even get to talk about, some of my favorite Swiss things. We didn't talk about Rousseau, coming back to Geneva and being locked out of the gates and deciding, taking that as a clue because he got back to Geneva too late to decide to wander the world. Lots of those things. So maybe for on another podcast, we'll do Keith Talks Rousseau.
Okay.
Fascinating.
Yeah.
Can't wait to hear you talk about
that could be you and
Calvinist
Dan.
history in Switzerland.
Yeah.
That's going to be fascinating.
Yeah. Well, thank you all for listening, and hopefully you found that insightful. And if you have questions, we're always here to help. So thanks again for listening to Give Me Some Truth International.
Walkner Condon Financial Advisors is a registered investment advisor with the SEC. Registration with the SEC does not imply a certain level of skill or training. The opinions expressed by the participants of this podcast are their own and do not reflect the opinions of Walkner Condon Financial Advisors. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Thanks for listening, and for further information, please visit walknercondon.com.